Good morning. It's Saturday, April 5th, 2025. It's just before noon on the East Coast. This is Rob Sin at CEO Technician on X at Goldfinger on CEO.ca. Lots to get to today. Probably break this down into two videos. Wow. What a week. A lot to unpack here this morning during the weekend. It's actually great. It's the weekend, so it's slower and there's more time to reflect and think a little bit more deeply about what's going on. I felt like I was a bit out of sorts during Friday's trading session. It was just so fast. Um, a lot of technical indicators, oversold indicators, sentiment indicators would suggest that Friday's close, Friday afternoon should be a buying opportunity for equities. But we close on the lows and stocks traded lower in after hours trading. So literally heading into the Sunday night futures open, Monday morning cash open, with a lot of fear in the air. Fear is very palpable. Uncertainty is not even the word. I mean, it's kind of like chaos. Yes, there's uncertainty, but I think it's an understatement, right? I mean, to upend the post World War II global economy, the order of how things occur, how trade is done for the last 80 years, so much. So, I mean, it would be very unrealistic to expect that the world financial system and the world order could be reshaped in a few months, right? That would be completely unrealistic, right? And if that's what is actually going to happen, which it seems that that's what is being attempted, we should expect some turmoil, some higher volatility, and that's what we're getting, right? It was almost like, I mean, it's clear based upon how markets traded on Wednesday, and I was even thinking that, look, they're not gonna go huge on the tariffs, maybe like 15 to 20%, but what was announced was obviously bigger than everybody's expectations, was bigger than my expectations. And I'm not going to get into those numbers. That's not my expertise. I don't know if it's anybody's expertise. I'm not even sure it's the administration's expertise, but it was announced and we're dealing with it. It is what it is. Like literally it is what it is. So um let's this interview up on my Substack with Treasury Secretary Bessent. I mean, there's a lot in it, but I think the gold part is very interesting. There's a lot of other parts on trade and tariffs, the stock market that is probably worth tuning into. It's interesting how this administration has its choice podcasters who get exceptional access and advantages. I guess that's the way the world works, right? Um, but he is not anti-gold. In fact, he's a gold bug, and he sings the praises, the virtues of gold in his own way. Um, and then on Thursday, I made the point that the Fed is now way behind the curve. And I thought that, look, if Friday's jobs number was actually a big miss, which it was not, there was a chance the Fed could swing into action next week because the revisions, yes, they were downward, but they weren't huge. Because the headline number was above expectations, I don't think that's going to happen. Now, look, this market's fast. If Monday, Tuesday turns into more like Friday, if we just turn into a complete shit show catastrophe, then they will have to swing into action. If markets become, increasingly full of dislocations and markets are not functioning well, then the Fed is going to have to be taking action. But I think they're going to want to see the whites of Trump's eyes before they do that. I mean, Powell, look, he's supposedly a Republican. I'm sure he probably leans more to the right, more to the conservative side. I mean, that would be to be expected. But I'm pretty sure there's no love lost between him and Trump, quite simply, including the fact that Trump has consistently overstepped his role as president and threatening the independence of the Fed since he came into office his first term in 2017. It's interesting, these two characters and the way they sort of play with one another is interesting, but I'm pretty sure that if we think back to last August, does anybody recall this market downturn that occurred during the summer and sort of what was supposedly the driver of that? Well, remember the employment data started to really weaken during the summer. Okay, we had a very clear downtrend in the jobs data, and Bank of Japan did something. The yen got wild. There was unwinding of the yen carry trade. Blah blah blah. You know, we can make up the narrative, but really, I think it was just that there were signs the U.S. economy was weakening. There's major cracks in the economy, and this is something that the current Treasury Secretary talks about, how the cracks and the weakness in the underlying economy in the U.S. in 2024 was papered over by Biden and the Fed. And the fact the Fed cut 50 in September and then cut again in November sort of helped the stock market to rally into the end of the year. Then there was obviously like this little honeymoon period after the election, some optimism for the new administration, yada, yada. You know, we can narrate it. It's pretty much what happened. And now that optimism has completely been washed away. It has dissipated entirely. Yeah, I mean, obviously, look, the president has his hardcore base who are never going to waver. I mean, you know, people make jokes. He could shoot somebody on Fifth Avenue in broad daylight. They would still support him, right? But the fact that the Wall Street Journal, okay, the Wall Street Journal, pull up the Wall Street Journal today. The Wall Street Journal basically negative in their edition today, very negative on Trump, even kind of a yucky capture of him in the limousine making a funny face, and you know, and you know, I so if the Wall Street Journal and the New York Post are going to start to turn on him, then you know he's in a bit of trouble here, right? He's getting some pushback. Now that may not deter him in the near term, but it will probably sooner than later. Okay. And especially if the Republicans in Congress start to turn, which has started, but it's very slow. The current thinking is that, and this is in this quote by Senator from Wyoming, he's the number 2 Republican senator, right? So he's pretty powerful. He basically said that, look, the tariffs announced were the high watermark. So they're starting the negotiating with like, here, take our worst number, right? And they're going to recalibrate them lower based upon the negotiation. So there is ample room for the rhetoric, for the numbers, everything to be ratcheted down, for things to cool off. There is ample room. Treasury Secretary said the worst thing trading partners can do is to announce the reciprocal tariffs to counter, to push back. That could create a, what I guess is called a trade war, ratcheting up the tariffs. And look, I'm just going to call it like I see it. I mean, Trump is a bully. It's how he's always been. So if they fight back, he's going to bully them and he's not going to want to back down. So I think that most of the trading partners know that. And look, let's sit down and talk this through and see if we can come to an agreement, right? And I think like already on Friday, there were positive signs from Vietnam. Vietnam manufactures a lot of clothing, apparel that's exported to the U.S. Lululemon has big operations there. Nike has big operations there, right? So Vietnam said, look, we'll get rid of all the tariffs. You get rid of what you just announced, and we'll get rid of all our tariffs, and we'll have free trade. Okay, I mean, so if these deals start to happen with individual trading partners, that will help to cool the market, to calm the market. The UK also made an offer. I forget exactly the details of it. I think it was dairy or something. China pushing back, but the US and China, this is going to have to be a major summit. And this is going to be, that summit will really be the reshaping of the global monetary order, the global trading system. This is not going to get done by emails and sound bites from Trump and Xi and the press, right? These two guys have to really have a summit, and there has to be a will from both sides to make a deal. Now, obviously, a trade war between the US and China is bad for the world. It's bad for everyone. It's horrible for China. It's bad for the US. So why would everybody want to lose? Right? That doesn't make sense. So what I'm saying by talking about all this is I believe that Trump hit the red button, and there is a panic, there is fear, there's very good reason to be fearful and to be uncertain as hell. But there is a path forward that is much more favorable than what we saw on Thursday and Friday. So we will just have to see how that path forward gets navigated, right? I'm not going to get into why this is happening and what the Republicans want the new world order to look like and whether it's realistic or not. I think that's a conversation for another day. But let's get into markets. The point I made in this post really is that the Fed is behind the curve. And so whatever your opinions are of the economy or the tariff policy or Jay Powell, the Treasury market is sending a message, right? And with the 10-year falling below 4% on Friday, actually getting under 3.9% the lows, the 2-year falling under 3.5%, but closing back above 3.6. I mean, the yield rallied quite a bit. The 2-year sold off. I mean, that the way the 2-year traded on Friday tells me the Fed is ready to cut. And that the bond market is not quite as fearful as maybe the stock market closed at on Friday. Okay, like the VIX. I mean, look at the VIX. It closed above 45, right? Like a 45 VIX is panic, right? But look to the left on the chart. So, within the last 12 months, there was a day that the VIX traded above 60. Now, that was that early August thing where we had the bad non-farm payrolls print, and then we had the Japanese yen carry trade unwind, right? It was kind of a very weird 3-day market sell. I mean, it's a borderline crash. It was very weird, right? But the VIX at 67 didn't match what was happening actually in the equity market. The VIX overpriced the fear, right? This seems appropriate for based upon the carnage that we saw on Thursday and Friday in equities. This spike from, let's say, 20 to 45 in the VIX, that this seems appropriate, and there is elevated fear. But if we could get to 67 on a weakening jobs market and a BOJ rate hike, then we could certainly get back to 67 on the reshaping of the world economic order and the global trading system and reshaping the post-World War II financial system, right? Yeah, so there's fear in the air. There's no doubt. Like, fear is very elevated. It is at least as elevated as early August 2024, and I think some could argue it's actually more elevated. Now, this is interesting. the put call ratio. So yeah, we're above 1. Okay. Fear is in the air. People are buying puts. Of course, that's obvious. But look at like first day of November, right before the election. Put call ratio was higher. So there was so much hedging going on going into that election. That was a very specific risk event, right? Like that event, if it had been undecided, there was no clear winner, it could have gotten very ugly, and people were hedging into that, right? And then there was the big unwind following the clear outcome, right? So we're not even at where this put call ratio went to in early November. And so that's just me saying that there could be more fear to come on Monday, right? But if we look at history, odds favor an update on Monday, right? And certainly if we get more panic selling on Monday, odds swing highly in favor of a violent snapback short covering rally either Monday afternoon or Tuesday, right? So price may not be at a low, right? In fact, I would probably argue that price, just based upon like the S&P 500, that the 5100 level or the 5090 level is not the low for this correction, right? I think odds favor that quite strongly. But in terms of time, very likely we're within 1 or 2 trading days of a major tradable low, right? But could the S&P fall another 4%, another 5%, another 6% before we have a 10% rebound or a 12% rebound, right? So that's how these things go. And that's why that VIX is at 45, right? Yeah, I mean, and then look at all these analogs. So the 4 recent analogs in the last 50 years, 1987, okay. Once the crash was over, it was a tremendous buying opportunity, but the S&P dropped 22%. We're at 17% right now. So that could be another 5% to match 1987 in terms of magnitude. 2001, well, yeah, that was a short-term buying opportunity. We got a rebound, but that was a bear market year, and stocks fell further in 2001, right? So the March 2001 analog was not the low, right? 2008, same thing. Got a rebound. See the rebound 1 day, 2 day, 1 week later, but that was not the ultimate bear market low. The ultimate bear market low was in March, first week of March 2009. And then 2020, very weird situation, very different from today. I mean, I think a pandemic is a lot different than changing the global economic post World War II order and potential trade wars, right? It's different catalyst, different set of variables involved. Cannot compare this exactly. And I don't even think the Fed response will be the same. It won't be the same. They won't, the Fed will not do what they did in March, April 2020, right? So the way the Fed responded made these outcomes way more favorable for the stock market than they are likely to be in this current situation, right? So overall, I think we can assess it as odds favor. We're going to put in a bottom in the next 72 hours. There's going to be a tradable low. We'll get a rally. We'll get some relief, but by no means is the coast clear at that point, right? This is a very volatile situation. Odds actually do favor that there's further to go in this correction, both in terms of time and price overall. Okay, I hope that made sense. Basically, there could be a short-term trade setup from the long side, but bigger picture, the coast is far from clear. Investor sentiment. So, the DSI is one measure of sentiment. So we're in single digits on the NASDAQ. I haven't seen that in as far as I can recall, right? So definitely fear is in the air. Silver was above 80 just like a week ago, and now we're at 35. So there's been a sharp reset in precious metal sentiment. VIX just, going through the roof, 77. So a lot of bullishness on the VIX, a lot of bearishness on equities. And these single digit readings in the S&P and NASDAQ, I mean, the S&P's at 10, it's close enough in my opinion. These are characteristic also of, we're within 24 to 48 hours of a tradable low, right? These don't register such low levels very often, once a year at most. And again, 9 out of 10 times, it's a buying opportunity, 90%. But it's the 10% that the market flushes another 10% and wipes out your calls to zero, or your leveraged longs lose 30% or whatever, right? That's the thing you need to worry about here. And that's why the VIX is at 45. Yeah, I think the chart speaks for itself. Clearly, that marginal new high, the marginal new highs that were made in January and February, that's going to be in the stock market top textbooks for the rest of my life. It's going to be in the history books, right? Classic stuff, very weak marginal new highs on low volume. And look at what has happened since, right? I mean, this you could, hindsight is 2020. We can look back to mid-February and say, wow, stock market bulls were really smoking dope and taking a lot of risk for very minimal potential further upside, right? But look at the QQQ. So like I said, I think we're within 24 to 48 hours, market hours, of a major tradable low. And look to the left on the chart, right? It's the April low, the August low. We're at the August low. We're within 3% of the April 2024 low. So there's a lot of big long-term support levels right underneath current levels. And the NASDAQ has been hit much worse than the S&P 500. I mean, some of these stocks are down 30% or 35% since February. That's a sharp correction. That's very sharp. Gold, look, 3,200 got tagged. It doesn't show on this chart, but the June futures definitely did tag 3,200 there on Wednesday. I think it just very overextended. A lot of profits are in gold, and finally on Thursday and Friday, people took profits. They exited the trade. Bigger picture, it's the number one asset class I'm most bullish on here. Near term, just chart technical trader, I think this has to come down to 29.50 for the correction to be over. It's screaming to me it's going down to 29.50. If it comes to 29.50 and U-turns, V-bottoms higher, that will be fantastic. Longer term, I think it could potentially, if this thing becomes like 2008 or 2020, it could come back all the way to 2,800, right? But the prospect of negative real rates in the next 6 months, and who knows how negative those rates will have to go and how long they'll be negative, with the reordering of the global trading system and the world monetary order, I mean, the bull case is the word compelling is an understatement for gold here. So just like stock market investors should look at the opportunity to buy stocks at a lower PE ratio, a lower valuation, as an opportunity longer term, gold bulls investors who are maybe taking a look at gold for the first time should embrace the opportunity to buy gold at a lower price if that does come about in the next week or two. If we do get that flush down to 29.50, I think you have to embrace that as a buying opportunity. Silver, I'm not going to talk bad about silver. I'm not negative on silver, but obviously all the silver squeeze BS that was going around at the end of March was sort of a sell signal. I pointed that out, and we've had a massive flush, right? Looks to me like 29. We're almost there. Like that's the support level, like maybe $28.50 to $29. And silver will, I mean, when you get these kinds of candlesticks, you sort of need to work on a bottom through time, and that's going to take a couple of weeks to sort of work through, right? So I don't think there's a V bottom trade here in silver with what Trump 2.0 has sort of done by hitting this red button on global trade, right? We need clarity on that for silver to rebound back above 33. And, everybody's talking about inflation, but all I see is deflation, right? I see lower bond yields. I see lower equity valuations, 17% decline in the S&P, 25% decline in the NASDAQ. I see crude oil dropping 20% or almost 20% in 2 days. Copper getting whacked. What was that? That was like more than 10% for the week, right? So there's deflation out there. There's deflation. Yeah, sure, maybe some people are going to raise prices, but I find it difficult to really envision how like retailers, like let's say Walmart, are going to be able to pass on 50% tariffs to consumers with based upon the negative wealth effect of just the last week, right? Yeah, I mean, obviously it's early days and we really don't know. This needs to play out over many weeks and months, but I'm seeing deflation, guys. So let me know when you get the inflation, like send me that memo and that data. But right now I'm seeing deflation, and I'm seeing a Fed that's way too tight at 4.5% on the Fed funds rate. Way too tight. The Fed could literally cut 50 basis points next week and still be too tight, still be behind the curve based upon what is going down here. And then like, man, Freeport, McMoRan. So we're going to make America great again and make American mining great again and critical minerals great again. And we're going to produce copper in the US. But holy crap, this is the company for copper production in the US. And look at what happened here, right? So I was a buyer of Freeport on Friday. I will admit, raise my hand, I bought Freeport on Friday. Ouch. I'm in the red this weekend, right? So I'm sitting as a bag holder in Freeport, and this is a capitulation for us. I mean, look at the RSI. I mean, so either the fundamentals are going to assert themselves that Freeport has the premier position in the reshaping of global manufacturing and critical, minerals. They've got the most copper mines. They've got the most U.S. copper production. Um, yeah. So either that's going to be true, which I think it is, or something else is going on, right? And if something else is going on, then we ain't seen nothing yet in terms of this market decline. Okay. Newmont, same thing. Biggest U.S. gold producer, biggest global gold producer, down 8.6% on Friday. So I was a buyer of Newmont too, right? Like the prospects for a U.S. gold producer that also has multinational operations, also has a lot of copper production, right? I've got a lot of U.S. mining projects that they're just sitting on. They've got a ton of them, right? So the future is bright for Newmont. And if I get the opportunity to buy it at whatever 12 or 13% off sale over the span of 30 hours, well, I think that's prudent. Like I'll buy at a lower valuation about a month out from when Newmont is going to report its best quarterly result in the history of the company with just massive profits and free cash flow, right? So like where to hide, you want to be strategic and think what are the industries that are pretty well insulated from the chaos that's going on, and what are the industries that could actually benefit from this reshaping that's going on, right? And so I look at Freeport and I look at Newmont and I think, well, I think those are two companies that are pretty well positioned. The market agreed that MicroStrategy is well positioned. Let's hide in MicroStrategy. Let's hide in this Bitcoin vault, right? This cultish Bitcoin stock. Hey, I bought some MicroStrategy on Friday too. Okay. I think maybe that's not such a bad idea. And the chart kind of agrees, right? If the fact this stock is up while everything is getting a flamethrower um, shot at it, that's good enough for me. Lululemon, I regret not buying this on Friday morning. I'm kicking myself. This is my biggest regret from last week. I made some losing trades on Friday. That doesn't matter. That's just the price of playing the market. But this one, damn it, why didn't I buy Lulu? This is capitulation flushed out, So ridiculously oversold on Friday morning at 240 a share. And look at what it did. 10% reversal to the upside. So continuing on uranium, this is a sector that I am turning favorable on again after getting away from it in Q4 of last year. I think that you keep it simple, stick to the highest quality. Every time there's a market correction or a sector downturn like we're currently having now, we're having a market correction in the midst of a uranium sector cyclical bear market, right? I think I think Chemical falling from 62 to 37 qualifies as a cyclical bear market, quite frankly. Um, so we're having these two forces occurring simultaneously, and anytime that happens, it's an opportunity to trade up to the highest quality names. So I'm not going to go past Cameco and NexGen. I think Cameco is the best of breed. It is the keystone stock for the sector. It's what all the hedge funds buy when the sector turns and it goes into an uptrend. And just look to the left. So this is the weekly chart. I think you need to zoom out, put things into perspective here. This traded 36.43 on Friday. Look to the left on the chart. $35 is major long-term support for Cameco. Okay. So if you can buy it at 37, at 36, even at 38, you have a downside reference point there. I mean, I wouldn't advise anybody to put the stop exactly at 35, but you know what I'm talking about. You can risk 10%, which is reasonable. And even just on a market snapback, you can make 10% in a day here in Cameco. And if you have a little more patience and a longer term time frame, I mean, Cameco can trade back to 50 in the next couple of months. So that wouldn't be too outlandish, of an upside target. And, what is 50? That's like 35% above today's levels. So I like the risk versus the potential upside reward in uranium here. NexGen is another one. I was buying this one last week. Let's pull this out to a 3-year weekly chart. This is so beaten down on every time frame. This is so oversold. We're talking about from on the NYSE listing, $9 a share to $4 a share. Like that's literally the move that's happened here. More than 50% drop. Look to the left on the chart. Big support going back to 22, 23 at around $4 a share on the NYSE version of NexGen. And there's just not many assets like Rook One out there. In fact, there is only one. So, the trade war, as serious as it is, as uncertain as it is, just all of that stuff, I think the sun will rise tomorrow, and once in a lifetime assets will still be worth once in a lifetime prices, right? And so this is, I hate saying promotional stuff like this, but I'm just going to say it because it's what I feel. This is a gift. The market is giving us a gift here with NexGen at $4 a share, giving us a gift with Cameco at $37 a share. That doesn't mean you're going to buy it and make money tomorrow, right? You could get your ass handed to you for another few days here if this thing gets worse. You have to be fully prepared for that, and that's why you size positions. I think it's appropriate to leg into some of these trades. None of us are smart enough, or none of us are omniscient enough. We're not Nostradamus. We don't know exactly how the future is going to unfold. So leg in, go in gingerly, but just understand that Mr. Market is serving up some gifts here, right? And those are two of them. Snowline. So so we'll go to juniors, and this is wrapping up this week's video. Even the best of breed, the best of the best, B2 Gold, 10% investor. Snowline just did a $20 million financing above $10 a share. They still have a pretty good tight share structure here, despite the fact this is like 4 years into drilling at a location where they need to use helicopters to get the rigs in and stuff like that, right? So it's not cheap to drill in far-flung areas of the Yukon, but they've done it. They've drilled off a massive multi-million ounce gold deposit that's just a beauty, absolute beauty ore body. And this is best to breed in the junior gold sector. I mean, sure, there's companies that you could say are up there with Snowline, but I don't think we can say there's any company that's better than Snowline in terms of the performance, in terms of the quality of the ore body, the management team, financial position, et cetera, et cetera, et cetera, right? So even the best of breed got smashed in the mouth, like literally punched in the gut and kicked in the face last week. 5 days down every day last week, drops from 872 all the way to 708 at the low, closes at 715. And you have to ask yourself, look, I get why a stock like Snowline or any junior miner dropped 20 or 30% last week. I get it, obviously. Risk off, sell, get me out. I want to go to cash. I'm afraid. I'll wait to see what happens, right? That's the psychology of market participants. We all understand that. Got it. But if you have a longer term view and assess this situation, assess the last 5 days, what has happened, have Snowline's long-term prospects, the opportunity here, has it deteriorated? Has it gotten worse? Does the value of those, whatever 8, 9, 10, 11 million ounces of gold in the ground there, is that now worth less? Is the future value of that now worth less based upon the last 5 days? Now, obviously, the market says yes, right? So we have to respect the market, but is it really? Or is this just a short-term fear, risk-off trade that has presented a lower price entry, which actually means that the potential profit is higher now than it was a week ago, and the potential downside is now much less because the price has already dropped more than 20% off the high, right? And also, like Snowline would be a great example. It's the one I led with because I believe it's one of the highest quality ones in the junior mining sector. Also, they have I'm not up to date on their cash position, but I'm sure it's above $80 million. So they're in a position of great strength in all aspects of the company, including their finances. So literally, if the market got even worse for the next few months, does it really change anything for them long term? I'm talking 2, 3, 4 years out. I would say no. Yeah, that means the share price could fall further. No doubt about it. We all know that. Markets are volatile. The junior mining sector is crazy volatile. We all recall March 2020. Totally get it. But I think investors need to start thinking Monday morning in terms of bigger picture, not 1 hour, 1 minute headlines, right? Start thinking bigger picture. And if you actually want to be a profitable participant and not a victim of the stock market or the junior mining sector, you need to start thinking differently, and also in terms of fading some of these panics, okay, and just buying quality at low prices. It's really not more complicated than that. It's literally akin to buying a house in an up and coming neighborhood before it becomes totally built up and full of people, right? You're seeing the future to some extent, and you're getting in at an attractive price from which the value of your asset you're holding can appreciate in the future. Stocks are no different. Okay, we just think about them a lot differently, make it way more complicated. Alphamin. So this is one of my favorite stocks to talk about the last couple weeks because I think it's so interesting. I'm long it. I'm biased for sure, but I love this setup. I love the fact their mine is shuttered, the world is on fire, and this stock was up on Friday. Like, are you serious? This stock was up on Friday. It was up almost 8%. So their mine is shuttered, right? There's a civil war, an uprising, call it what you will, in the DRC. And this rebel group, this armed rebel group, has advanced to within proximity of their tin mine, their tin mining complex there. And so they've shuttered the mine almost a month ago now. And it's still shuttered. That's why the chart looks so awful. But what's happening here? It's basing out. It's forming a base and trying ever so slightly since March 24th to form a little uptrend. So, things I'm reading, things I'm hearing, U.S. Ambassador is on the ground, and there's peace talks underway, and the potential for a resolution to this whole thing, and potential that the U.S. might make a deal with the DRC government, minerals or ability to invest in minerals in Congo for security guarantees. I don't know. It's interesting. Like Africa is a strategic battleground, and regardless of the America First policies of the current government, the U.S. needs to continue to have good relationships with African countries and continue to do business in Africa. It's too big of a continent. It's too strategic. There's too much resources there, right? So hopefully this administration is smart enough and wise enough to actually do that. And it sounds like something like that is happening. So I'm hopeful that there could be a good outcome here in the next few weeks. And maybe that gap at 75 cents gets filled, and people who are bold enough and had enough foresight to buy at the current low prices will be able to profit. All right, that's what we're doing here. Sitka. So this is shocking. So we saw the Snowline chart. Banyan Gold, another gold explorer in the Yukon, got thrashed on Friday. A lot of juniors got thrashed. I mean, it was a 90%, 92% down day or something. How the heck is Sitka green? Right? Like, look at this. Like, if I looked at just this chart, I would have no idea that gold was down $100+ an ounce Thursday, Friday. I would have no idea that we're down 17% in the S&P 500, 25% in the NASDAQ. I'd have no idea the VIX is at 45. What's going on here, guys? Right? So that's a strong uptrend, strong chart. The dips are being bought. Every little dip is being snapped up. I wonder what these buyers might know or think they know about drilling that's ongoing at the Blackjack deposit in the Yukon, right? So it's just interesting situation to pose some questions and ponder. But this sort of market strength is almost uncanny. When you're seeing the bloodshed across markets for this stock to be up, I mean, Newmont's down 9%. You would expect any junior gold explorer to be down 15% on the same day, at least up 3.85%. I'm long, I'm bullish. Yukon Metals, also, this is interesting, like holding pattern. It's in a holding pattern, consolidation, about to close a $10 million financing that was oversubscribed by more than 2x, right? And this is the time, I think April and May is the time to look at Golden Triangle and Yukon explorers, right? And so Yukon Metals, obviously a Yukon explorer, they're going to be doing a pretty good sized drill program at the Star River project in the Yukon this summer, and they'll probably drill their AZ project as well, which is kind of like a porphyry project also in the Western Yukon. So I like the stocks that are holding up during this period and where the dips are being bought. So, if you can get the dip, buy Sitka at 48 or buy Yukon Metals at 51, good on you. Good on you. American Eagle Gold. So this one down like Freeport. I mean, copper, like Hercules Metals, like Freeport, McMoRan, like Southern Copper, American Eagle down on Thursday and Friday, as we would expect, given what happened with the copper price. But I got to respect the support at 41 cents. And again, we want, during these risk off times, you want to buy companies in strong cash positions. So American Eagle has something like $35 million in cash. I don't know the exact number, ballpark 35 million after the big investment by South 32 last year. South 32 paid 87.5 cents. Obviously, that's a big company with a much bigger bankroll than you or I. So they're on a different time frame. They have a different risk tolerance for sure. But what that does tell you, somebody's able to write a $29 million check at more than double today's share price. That is giving you a valuation reference point, a very strong one. And so I think I like it at 41 cents. I like it a lot more at 41 cents than at 87 cents or 90 cents, right? And especially now, that investment was made as drilling concluded last year. So we knew there was going to be a 6-month period without much drill results, or not a whole lot of news. I mean, obviously there were still more results to come, but there wouldn't be drilling and there wouldn't be a constant stream of news flow, right? Starting from the end of 2024, right? But now here we are in April. So drilling will resume again next month. We're literally, I don't know, I'd guess 5 or 6 weeks away from the resumption of drilling at NAG. So 22 cents a share in cash, roughly. So the enterprise value is like 19 cents. Sal 32 paid 87.5. So that's pretty good. I'm long, I'm biased, I'm bullish. Hercules, I mean, obviously look at the hat I'm wearing. I'm obviously long, I'm obviously bullish. I think everybody knows that. But this is very interesting because this is almost 100%, I would say, result of two main factors: the copper price drop last week, the overall risk-off market environment of the last week or two across juniors. I think the pullback to whatever 68 cents, that was just normal, healthy action. I would attribute the last, let's say, 25% of this drop to just overall market risk aversion, right? There's nothing to do with the company or the stock aside from just, I want out of anything that is risky and anything that could fall further in the coming days and weeks, right? And so that's literally what happened. And that's also why Hercules is down 8.93%. But those who follow the company know, well, things are about to get active again, right? Drilling is going to start in the next few weeks. I expect the company could have a news release out even as early as this coming week, certainly the following week if it doesn't come this week. I'm glad they didn't put out any news last week. That would have been kind of wasted for sure. So we'll see, but news is imminent, that's for sure. Drill plans, targets, more clarity on the commencement of drilling, all those little details. And yeah, then drilling kicks off, right? And this is the biggest drill program in the history of the company, the biggest drill program in the history of the project, going all the way back 100 years, more than 100 years. So what's not to like at 50 cents, right? And then XXIX. So this is another company, strong cash position, I think over 5 million. CEO Stephen Stewart buying on the open market last week. He's got something like, I don't know, 9 or 10 million shares, and he bought another 100,000 shares. So already a huge investment in the company, a big percentage of net worth exposed to the company, exposed to junior mining. I mean, it's what he does, right? He's the chairman of the ore group, but willing to bet more, willing to put his money where his mouth is, put the bet down on the table and buy another 10K worth of stock last week. With the market under pressure, and they're drilling at the Opimiska project in the Saddle Zone. They're drilling out, trying to further outline a higher grade area, the higher grade zone of the open pit at the Saddle Zone. So we'll probably start to get some assays from that maybe later this month or early May. And it's going to be a pretty busy year for XXIX at both of the company's flagship projects. So again, it's a clearance sale. It's a sale, and those who are actually have a good anchor to value and understand what these companies are doing and what the long-term potential could be, well, it could be an opportunity. So that's it for this weekend's video. I think we got through a lot. I hope I helped some of you guys with your thinking, maybe your outlook, to organize your thoughts and help to put together a game plan. But this is the time to be doing a lot more thinking than doing, and making a game plan, and not operating from emotion, but operating from planning and a clear process. I got a little off my process on Friday, and that's what happens sometimes in these crazy markets. They can get us out of our mindset. We need to take the weekend, take some quiet time, and get back into the zone. Thanks for watching, and have a wonderful weekend. Cheers.